According to the Wall Street Journal, Bank of Montreal is exploring the sale of some of its U.S. branches. This comes, apparently, as the bank seeks to offload certain locations after its huge acquisition of the Bank of the West, which closed last year. We're joined by Ebrahim Poonawala, head of North American Banks Research at Bank of America Securities. Great to see you, Ebrahim.
Great to see you, Andrew.
Thanks,
how are you?
Thanks very much indeed. So just remind us, before we get into possible divestitures, this was a pretty big deal for Bank of Montreal, wasn't it?
That is correct. The Bank of the West was the largest deal for Bank of Montreal in the United States.
And hardly surprising, I guess they're going to cut back on some jurisdictions. Apparently the Dakotas, they're less keen on.
Yeah, and I think it's consistent with a period of digestion or optimization of the U.S. franchise that has been underway at BMO over the last year or so. And we view this as another kind of step in that process.
Is it too early to say whether this deal was well timed or whether it's going to work out for BMO in terms of return on capital?
Right. I think in the short run, a lot of these deals are so subject to what happens with the macro environment. But I think over the medium to long term, and I'm actually in town today hosting Bank of America's annual sort of Canada Banks Day.
Yeah.
And I'll have a chance to catch up with the BMO CEO, Darryl White, and head of their U.S. business, Aaron Levine, tomorrow. And I do think the deal has given them a decent scale in the United States to be competitive. And I think what the street is now looking for is, can they deliver reasonable returns to make it a success?
Yeah, because not every location is going to match your plan. And can you characterize, I mean, is Bank of the West a very urban bank, or is it in small towns?
No, so Bank of the West primarily has a lot of presence in urban centers in California. And when you think about just the context of what they're trying to exit, this is about 3 to 4% of the deposits based on what was reported in the Wall Street Journal yesterday. So it's a very small, and again, I would view that as a fine tuning of the franchise. And again, in retail banking, you win given density. And I think that's what it does, is they're going to be focused a lot more on markets where they have density, significant presence, to make it worth their time and make it profitable.
Why is density important?
So density is important, driven by the fact that eventually there's a lot of fixed costs when you're in retail banking. And the way you really make a customer profitable is by, for lack of a better word, cross-selling, right? The more you do with the client, the more profitable that relationship is. And even though for decades people have been calling the death of the bank branch, I think the bank branch still serves as a big billboard in these markets where customers, be it consumers, small businesses, identify with the bank. And if all of that leads to just doing 4 or 5 different sort of, having 4 or 5 different products that you're kind of being able to cross-sell to the client, which leads to a profitable relationship.
Last year, last month, about a month ago, you reiterated you're neutral on BMO. You said one thing that kind of holds you back from going to a buy is the credit performance. Have they put a lot of that behind them?
So it feels that way, right? If you look at just their impaired, the metric that you use in credit, impaired PCLs were about 66 basis points at the peak. At the end of last year, they've come down closer to normalized level around 45. But still, I think when you look at trends around impaired loans, you're still seeing a fair amount of worsening. And I think given the stocks had a significant run, which in all honesty we've missed, but I think when you sort of put continued lingering credit concerns combined with how well the stock's done, I think that's kind of kept us on the sidelines.
Certainly, though, the shares have been okay. Along with other banks, they've been hitting record highs over the past while. Yeah. I have it, beating the bank's index, but I guess that's been dragged down a bit by TD, whose stock has struggled in the past 5 years.
It has struggled, but I think it's been one of the better performing stocks year to date. Yes. And I think you've seen a bit of a rebound given what TD went through over the last year or two. Yeah. And obviously TD has their own investor day coming up next week, so that'll be a meaningful event.
As you say, TD Bank stock up 42% so far this year. Ebrahim, thanks very much.
Thank you so much, Andrew.
Ebrahim Poonawala, head of North American Banks Research at Bank of America Securities.